Thank you for joining me. I'm Alex, and I want to talk about Domino's. So they're the best pizza chain in the United States, and by that I mean nationwide chain restaurant type things. And basically there's Domino's, Pizza Hut, Papa John's, and there's a few others, but Domino's by far the best one that I've had anyway in this area. I'm narrowing this down quite a bit. Current price is $408.96, which gives them market cap of $16 billion. And dividend is just under 1%, with a payout ratio of 26%. So not a lot and not that much room for growth either. Like they can barely quadruple that, which gives them 3% dividend yield. So I wouldn't expect a lot of dividend even in the long run out of this stock. That assumes you're buying it at this price, though. Revenue $3.6 billion, which is slightly up. Earnings $401 million, also slightly up. That's 10%-ish. Definitely a good thing, but PE of 36, still pretty high. I don't think that the PE is justified with the revenue growth either. It doesn't even make sense for the 10% earnings growth, even if we assume that that's going to continue. Total assets $1.4 billion, total liabilities $4.8 billion, which gives them a total stockholders equity of negative $3.4 billion, which obviously not a great thing. I really hate companies that have a negative stockholders equity because obviously things can go south really fast if they don't pay enough attention. Like, they need to have enough float and have enough sense to keep the spending under control and kind of like always be prepared to go bankrupt, like if anything bad happens. So really the negative stockholders equity is a problem, especially when it's like as much as their revenue. So even at 100% earnings, that they would take a year to have a positive stockholders equity. So not a great thing, the balance sheet. So obviously for a growth investor, there's absolutely nothing here. The 0.5% of revenue growth is not, I don't mean 0.5%, I mean 5%, but still is not really enough for a growth investor. The 0.75% of dividend is not enough for a dividend investor either, especially when there's not likely to be too much long-term growth of that dividend. And with a PE of 36, obviously they're not going to be able to raise that dividend too much. For a value investor, the balance sheet is absolutely terrible. The PE is pretty terrible. The dividend yield is not great, and the revenue growth does not make up for that at all. So overall, I don't recommend this stock to anyone at this point, and I'm quite surprised that the PE is 36 with this balance sheet and the revenue growth and the dividend and the whole thing, basically. So quite surprised that the valuation is this high, and basically don't buy the stock. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.